Hello guys, today I want to walk you through how I was able to recover from what I consider quite a significant drawdown. I think in my last video where I showed you my account statement for the last 1 year, I was in a drawdown in one of my accounts in Funded Next. So the 70k account had dropped all the way to a drawdown of about $3,200, which is literally about 4.5%. So that's quite a deep drawdown. I was literally about 5% in drawdown. I got nice setups yesterday, one of them on CJ, another one on USD JPY. And they are quite interesting trades. One of them was actually very close to hitting my stop loss before it reversed and hit my take profit. Then the UJ trade was quite a smooth one from the entry point. It just, worked out very well. Didn't go into any drawdown. So my account is now back up in profit. If I'm to go to the overview, you will see we're now back up 1%. So the two trades made me about 4,000 USD, which helped me to recover all the way from the $3,200 loss and now 1% up in profit. Also, feel free to check out our trading community if you want to learn how to trade like myself and have that consistency in the markets. It's very important for you to have a deep understanding of the markets versus how it suits your personality and be able to customize your own strategy as well, which is everything we cover in our trading community. You get access to 2 modules, over 35 videos, which cover details of my own trading style, how I enter the markets. And of course, I also teach you the exact steps that you need to build a very effective and profitable trading system. I also do pre-week markets breakdown where I share what I'm looking for. So before the week starts, you have an idea of what you're looking for in the markets. Once I'm anticipating a setup, I share, like you can see these 2 trades literally by the same day in the morning. I talked about them before they even happened. And fast forward, at the end of the day, we took all the 2 trades, got my first 3R on UJ, second trade on CAD JPY again, got my second 3R. So feel free to check out our trading community if you are trying to achieve long-term consistency and build a very effective trading system that you can replicate over and over for a long period of time and make money with it. Also, as you've seen my trading, I'm very big on things like discipline, patience, waiting for the right setup. So you can be sure these are some of the skills you also develop by trading alongside me. On to the trade breakdown. I'll start with CAD JPY on the daily time frame. Then let's just remove all the drawings to make sure the chart is very clean. This market was in a bullish trend sometime last year, but then it's been dropping for a significant period of time. But the thing with my strategy as an intraday trader is I only want to focus on key levels and look for those short-term moves. So even though the market can be selling for the last 2 or 3 months, it's still possible for me to find an opposite trade and make money from it. So from a simple price action point of view, you would argue, assuming this is your first high, this market had created this lower high, a new lower low, lower high, lower low, because this one broke slightly below this one. However, sometime in the last couple of weeks, it was able to break this structure. So whenever we have a break of structure, of course, it's an anticipation that the opposite side is about to kick in, meaning buyers are trying to push price higher. So the break of structure is just one of those basic price action concepts to give me some signs that, maybe this market can have some strong bulls coming in anytime soon. But of course, that was not enough for me to think of taking some trades. So fast forward a couple of days later, this market was doing some pullback, some retracement, and I had my levels marked, of which from this low, which is here, if you look at it keenly, you extend it to the right and you'll spot that we had a very perfect level of support. Maybe I'll just extend it to the left so that you can see how we had a couple of touches from this zone all the way from the past. See, price got here sometime in 2022, bounced downwards. Second time it got here, it bounced upwards. Fast forward here, we had some rejections at this point. That's my 3rd point of confidence. Let's move forward. We have a 4th one, which is here. You can also consider this one because price rejected this level with a strong wick. Then moving forward, of course, we have a couple of rejections here. So long story short, price pulled back to a key level of support sometime, I think last week, if I'm not wrong. And price action is very important because you want to study the behavior of the candles. Price pulling back is not what matters. What matters is the manner in which price gets to the key level, of which we check carefully. Here we have a long bearish candle. Move forward, we have another significant bearish candle. But then as price is approaching the level of support, we start to have this pattern of very tiny body candles, And of course, anytime you see these tiny body candles, it means we have some indecision in the market. So since we've been having sellers, you might as well argue this selling momentum is slowly starting to come to an end, right? And further, as price is approaching the level of support, we start to have long wicks from this level, which are indicating that sellers are facing a lot of rejection from the buyers. If you want to go further, you might also see 1 or 2 days later, price broke out of this, some sort of consolidation or indecision, indicating possibility of strong buyers coming into the market. Now, this is on Tuesday. Keep in mind, I executed my setup the following day on Wednesday. So now, before you go to the execution, as I've told you before, I tried to build my buyers for the day based on how price has been behaving in the last couple of days, but primarily on the previous day candle. The previous day candle is indicating strong bulls, just to back up all the price action we've talked about: break of structure, retest to a key level of support, selling pressure, coming to an end here. Then we see strong buyers. So on the following day, I do have confidence that, if I find reason to take a bullish setup, it might actually work. Keep in mind, this is not a long-term prediction. I'm not saying that just because we had the break of structure, I've not told you I'm expecting this market to buy all the way, back to this high. No, I'm simply looking for a short-term intraday setup. And based on my testing, most of the time whenever we have a previous day bullish candle, there's a high chance the next day candle will have some bullish momentum. Of course, we have other confluences to look out for. Now, let's mark Wednesday, which is the day that I had my setup on CJ. Let's go to the lower time frame and see how I caught my trade. So my execution time frame is the M15 as usual. We come to Wednesday, the economic calendar was already clean, so I checked the calendar. There was no high impact news affecting this market that I was trading. Based on my system, my trading day does start at 6 a.m. because that is practically when I've tested to be a time that I can consistently wake up and take my setups without missing. So when you start our day, there are a couple of things I'm looking out for. Number one, if the market had been buying, for some period of time, I'll only take trades after the market has done something like a pullback. Now, fast forward to Wednesday, which is here. So if you check Wednesday, clearly this market had bought for a while, some time back. And then the previous day, which is Tuesday, we had this very long pullback. The market tried to buy again, but it didn't make a lot of momentum. So coming to Wednesday, which is my day of interest, you can see by around 6 a.m. price was here and it continued dropping all the way downwards. Now, long story short, by Wednesday, even at around this time, it was a good time for me to execute. So the next thing I'm looking for is a W pattern in this market, because that is what I use for my entries. We check from around 645, which is here. We had this selling candle, bullish, 2 sellers, then we had these 3 bullish candles. Now, you have to zoom in for you to find the accurate patterns according to how I draw them, because this is just my own style. This is not something that maybe other traders use. This is something that I've developed myself in terms of how I identify these patterns. So what matters is that the first candle should start above the neckline point. So if you check this red candle and you zoom in further, without a doubt, this red candle starts higher than the neckline. So now let's zoom out our chart. This was a pattern. However, I didn't execute my trade at this time for a very simple reason. After the pattern was completed, the next thing that I always check for is a retest of this middle part. Meaning I want, after this candle, price to come and retest. So if you check carefully, this retest happened at 8:30 a.m. my time. And for a retest to be of high probability, the previous 1 hour candle should be bullish. So if the retest is at 8:30, the previous 1 hour candle will be the candle between 7 to 8 a.m. So we go to the 1 hour candle, look for 7 to 8 a.m. You can zoom in. 7 to 8 a.m. is here. It was bearish. So keep in mind, I'm looking for a bullish setup. My bias is already bullish. So if my bias is bullish and the previous 1 hour is bearish, that's not a sign for me to be taking that trade. And that's the exact reason as to why I did not take this setup at this time. So as you test out your strategy and you build these confluences, they really help you to define the difference between a quality trade versus a trade which is not of high probability. So if I was just trying to take any random trades, I would just be excited and say this market has done a good pullback, previous day is bullish, we've got a W pattern here, let me take the trade. But just because I understand the importance of all confluences coming into play, it actually saved me from hitting a stop loss. I executed a buy trade here. This market sold with way over 20 pips and my SL is 15. So clearly I'd have lost that trade. So you can now delete this pattern and move forward. If you go 2 or 3 candles later, you see I had another W pattern here. Let me just mark it. Starting from this red candle, we had 2 sellers, this bullish candle, selling candle, and then another bullish candle. This time, this is a perfect pattern again. And as usual, the entry criteria is the same. After finding the pattern, we want to take the trade at the retrace of the neckline, which is somewhere around this zone. And if I'm taking my trade at the neckline, it's very simple. I want to make sure the previous 1 hour is bullish, or it's favoring the direction of the bias that I have in this market. So 10 a.m. is the retrace time. Price comes to the neckline. So are we executing this one? It's dependent on whether the previous 1 hour, which is 9 to 10, is bullish. So let's go to the 1 hour and look for the 9 a.m. to 10 a.m. candle. Come and zoom in and see here, 9 a.m. to 10 a.m. candle was a very solid bullish candle. So when the price is coming back here in the M15, I have confidence to execute because this setup has fallen in line with my entry criteria. So I come and take my bullish long position here. Let me just expand the screen. So my entry is at the neckline. This candle was looking quite funny. You know, the bullish candle closed here, the next bearish candle opened, I think, with a gap. So normally the candle shouldn't look like this, you know. So I just took this trade somewhere at this middle point in between this zone. This is where I placed my buy position with a stop of 50 and a TP of 45. Then you come and expand, and you can see this trade literally came very close to hitting my stop. Zoom in, a couple of hours later, it bought back and hit my take profit. Interestingly enough, this trade didn't close at stop loss. Even on my funded next account, this trade came 1 pip close to the stop loss, but it never closed. That just goes to show that the broker had very nice spreads. If you have a broker with poor spreads, this 1 pip is enough to wipe you out from this setup. So this trade required very strong psychology as usual, but these are things I've built and developed over time. I don't remember the last time I closed a trade prematurely because I was afraid to hit my stop loss. I just open my trades and I let them run. Whatever the trade does, I've already accepted that I have no control. It's these small things that make some traders not make money. A typical trader who has psychology issues would close out this trade, you know, when it's 1 pip away from the stop loss or even 5 pips away from the stop loss. You come back later, you notice the trade actually performed well. It could have returned for you about a 3R had you just let the probabilities play out. But because you are trying so much to be in control of the market, you close here at a negative and now you are down maybe 1% or something depending with what you are risking instead of being up about 3% for this trade. So that's the setup on CAD JPY. It was quite frustrating, took a very long period of time. When I say long, I mean about 6 hours, 45 minutes. That's long based on my strategy. Most of my trades close sometimes even under 4 hours. So a trade that took almost 7 hours is one that really, you know, played for some time according to my intraday setups. That's how I was able to execute my 1:3 CAD JPY bullish trade. Now we go to the next setup, which is USD JPY. Start with the daily time frame as well. So it was basically just the same thing. This market was dropping, but if you look carefully, this market had just come very close to the previous low. Now, if you understand market structure, then you know from a price action point of view, most of the times whenever the market is retesting a previous low, even if it's going to break, it usually has some sort of either retracement or some consolidation. It will play around before it can break the low. It doesn't happen all the time, but it's a behavior that you can notice in most markets. And we saw exactly that happening. Bulls kicked in. Then the bear started pushing the price lower again. But of course, I'm trying to be very keen on my levels of support. You come and mark here, you notice I had a significant level of support where price had been forming a couple of rejections. This was the first bounce off. We have a second one, we have a third one here. Let's extend this to the left. You can move further, you can see very similar price action to what we saw on the CAD JPY. We have another long wick bouncing off from the same level of support. Move backwards in time. We have another week here. So fast forward a couple of days later, price traded back to this level. And now for this one, when price touched the level of support, this bearish candle was still a very long bearish candle indicating sellers still had some momentum. However, the following day, we have our first small candle, which is almost an indecision candle because it's showing you that this selling pressure is now starting to become weak. Then fast forward to the following day, we get a long wick rejecting from the key level of support that we've already seen working for years. Then we get a significant bullish candle, which is here, and it comes and trades all the way above this last bearish candle, indicating that buyers have some significant momentum by this point in time over the sellers. As I always say, intraday trading is just like advanced scalping. You're looking for a very short-term trade at key areas of interest in the market, and you're not so concerned about the long-term picture in terms of what will happen next. So since Tuesday closed with a significant bullish candle, we come to Wednesday, and it means by this day I was anticipating to get a short-term bearish setup. Move to the lower time frame. My trading day starts at 6 a.m. as well, so I'll take this and push it to 6 a.m. So by 6 a.m. when I wake up at this point in time, this market had, done quite a bullish move. From this low to this high, this market had just bought with over 92 pips. So 92 pips is quite a significant move for a short-term trade. That means for me to take my next move, I'll at least wait for this market to drop a little and give me a pullback. So long story short, this market did a pullback later during the day. We were able to get significant sellers coming in. And as the pullback was happening, at some point, you notice this selling momentum started to get weak. So it was showing signs that the retracement is just about to end. So at this point in time, the next thing I want to look for is my W pattern. Now we have a selling candle here, buying candle, selling, two bullish candles which come and close above this neckline. And if you look at the behavior of this structure at this point, again, you would argue these buyers are trying to now overpower the sellers, because we've seen from this point, we've been having tiny bodies, and then we now come and find this bullish candle, which now eventually breaks out of this zone. So the most important thing is that I found my W, because that's what I was looking for according to my playbook. Then we identify our neckline, mark it, and what are we waiting for? Price to come and retest this zone. Once price comes and does a retest, this is where we'll be executing. So the first retest happened at about 12:45. Before I check the trade at 12:45, previous 1 hour is the candle between 11 to 12. If it's bullish, then we have every reason to check that setup. 11 to 12 was actually a bearish candle. So by that time, I still didn't have enough confidence to execute that setup. So going back to the 15-minute, let me just clarify. Here's the retest happening at 12:45, but you can see by 12:45 we've seen the previous 1 hour from 11 to 12 was actually showing that sellers were dominating the market. So I ignored the retest at this time. So after being more patient, we now found another retest again at 1 p.m. So by 1 p.m. the same thing. Now let me go and check the previous 1 hour. This time the previous 1 hour is the candle between now 11 to 12, since I want to execute at 1 p.m. So 11 to 12, come and zoom in, and you see 11 to 12 was now a very solid bullish candle, which even closed above the previous selling candle. So even from the 1 hour, you can see this is some confidence that, you know what, this market might be about to have strong buys. If you want to go further and do more price action, you might also argue this was a weak area from this point to this point. We had 2 weeks, and whenever we have a weak area, it means price was getting rejections from that point. So you might also argue that price had come to another area of rejection, which means there's a high likelihood from this rejection, as you can see what happened, it went up fast. From this rejection, what happened? It went up fast. So it's come back to the same area, and we are seeing a lot of confluences telling us that we have strong buyers kicking in, including this bullish candle. So our only anticipation would be there's a high chance you might see the same thing happening, that it will continue going back. So I'm just showing you these other price action confluences to help you see how there are a couple of things you can see in the market which help you to have a lot of confidence in the market before you execute your trade, such that you just let it run, and even if it hits your stop loss, you are very content that you did your best analysis. You don't want to hit stop loss and start regretting and feeling as if you took a bad trade. So at this trade hit my stop loss, I know for sure if I keep executing similar type of setups and repeating this type of entry model over and over, I'll be winning more than I'll be losing. And that's the most important thing. So our focus is not to win every trade. Our focus is to execute with a model that has proof of consistency in terms of profitability if you keep using it for your entries. So this retest by 1 p.m. is now valid because the previous 1 hour is bullish. We can now check our long position. It was a very nice setup. Barely went into any drawdown this one, as you can see. Stop loss 15, TP 45. Come and set that here. Within a couple of hours, this setup hit TP. So the previous one took, I think, 7 hours. This one, let me just check the time it took. Took only about, let's see, 3 hours to hit my TP. So this is now how my typical trades look like. But of course, UJ usually has great volatility as compared to CAD JPY. So it's normal for UJ to hit its TPs very fast. Before we continue, let me introduce you to Prop Farm Match. This is the place where you find data across different farms. Before you buy that Prop Farm challenge, you want to be aware of the trading conditions in terms of the spread, slippage. You want to be aware of the trading rules. This is where Prop Farm Match comes in. They offer detailed information across different farms. You can compare to see the prices, the types of challenges, whether it's a 1 or 2 step. You can check reviews from verified traders who have done payouts. If you're looking for a farm with discounts, you will find them listed with the best offers. And most importantly, you can customize your trading challenge until you find the company that suits you. For example, maybe you want a 1-step challenge, a company that allows crypto trading, allows news trading, weekend holding. You can customize all these things on their website and you find a list of the best farms. Be sure to visit Prop Farm Match. The links will be in the video description. Otherwise, let's get back into the video. So that's it. You can see I was able to hit my 1:3 and took my second setup, which assisted me to get out of drawdown and take my account back up to 1% profit. So if you've learned something in this trade breakdown, simple model, repeatable type of entries, look for the same thing every day, be patient and wait for them to happen in the market. So for this month, I've only executed 3 times and all my trades have hit TP, each one of them doing a minimum of a 3R. So that's almost 9% assuming perfect execution with a 1% risk. And that's the power of having a great system that you've tested and found proof that it's working, and also training yourself to be patient enough to wait for your trades. And of course, risk to reward plays a very key role. Coming out of a almost 5% drawdown can be tough for very many people. So I didn't come out of drawdown just because I won the trade. It's because I won the trades and each one of them was doing at least a 3R. So 3R times 2 is about 6R. And just like that, I'm able to recover up to 6 losses with 2 trades. So even if I was in a 6% drawdown, these 2 trades would have recovered all of them, just 2 winners. So risk to reward plays a very key role. And it's for this reason I'm not usually so quick to reduce my risk. So whenever I'm in a drawdown myself, I hardly reduce my risk. It's a question I get asked a lot. Unless I was using a strategy which gives me 10 trades in a day, it's when I'd be reducing my risk because I'm executing too much. But with my current strategy, I hardly reduce my risk whenever I'm in a drawdown. Because now if you reduce your risk, then you get a 1:3 and you now probably were risking 0.5. It will take you now way more trades for you to recover that drawdown. So if you believe in your system and you've seen it's working, you just keep executing. Then let the probabilities play out. If somehow I lost the trades and went into a deeper drawdown, I'll just keep doing the same thing, believing that at some point I'll be able to recover because the system has proved that I can't lose a certain number of trades in a row. So this requires a lot of high accuracy in your execution. You can't be fearful, you can't be afraid, you can't be missing out on the trades, because if you miss them again, it will take you longer to come out of drawdown. So I hope you've learned something in terms of how I approach the markets. Same criteria I've been showing you guys for I think close to 2 years now. Nothing changes in my analysis. I just look for the same thing. And I hope you've also picked 1 or 2 things on how I was able to come out of my drawdown and now back up into profit on this specific account. So with that, I'll end the video. See you next time. Peace out.